Hello, I'm David Cassidy with the Daily Market Update. Today, Thursday, the 21st of May. US equity markets yesterday reversed Tuesday's late sell-off, with the Dow Jones ending the day up 369 points, or 1.52%, while the broader S&P 500 index climbed 1.67%. Both after the Fed released minutes from its last monetary policy meeting back on the 28th-29th of April. The minutes showed that officials were concerned about the risks to financial stability as a result of the coronavirus outbreak, the potential for a second wave, and the lasting damage to the economy, which clearly suggests to us that the Fed will keep its liquidity floodgates wide open for the foreseeable future. Interestingly, there was also a discussion around clarifying forward guidance, either by date or an outcome. Forward guidance is an attempt to manage public expectations on future interest rates. The theory is that this should allow people to plan better, businesses to expand, and economic activity to grow. And it's a bit of a blast from the past, as both the Fed and the Bank of England used that shortly after the global financial crisis back in 2008-2009, but with mixed results. For example, back in August 2013, the then Governor of the Bank of England, Mark Carney, said that interest rates would start to rise when unemployment fell to 7%. At the time, unemployment was 7.7%. And then, in June 2014, Mark Carney implied that an interest rate rise was imminent. Unemployment was then 6.3%. However, the Bank of England didn't increase interest rates. Then, in July 2015, Mark Carney said that UK interest rates would rise at the turn of that year. They didn't. In fact, interest rates were not increased at all over the period and were then cut in 2016 as inflation was just 0.5% and unemployment was 4.9%. This morning, the FTSE 100 is currently down around 0.5%, and we will wait the weekly US jobless claims data, which is due this afternoon. Elsewhere, there wasn't much to glean from today's UK and Eurozone PMI Purchasing Managers Index data, although the data was encouraging as it showed both services and manufacturing have started to recover from April's record lows, especially as the lockdown restrictions are only just being eased. They all continue to indicate, however, a depressed level of activity. For example, while the UK's manufacturing PMI reading improved to 40.6 in May from 32.6 in April, it remained below 50. Remember, 50 is the line separating expansion and contraction. So a reading below 50 points signals the UK economy is still contracting.